Hello, everyone. Hello, sir. Welcome back
Hi.
to a new episode of Decoding Market in Three Moves. So, it's been 3 days in this week. How was the market?
Oh, it's been so dull. It's very very frustrating. The speed at which we are falling, I would usually expect that it rebounds as fast. It's taking its time, but the good news is we got the oversold reading on swing on the daily swing indicator on Friday, and on Monday as the swing was reviving, the Nifty did fall to make its low point. I think that point should hold in the near term. But more important in the near term, because we've had a couple of whipsaws in the near term, but I don't think this one will whipsaw. I feel we've hit the final support. But more important, like I said, is the big picture, longer term picture, which people should not forget, that we are in an improving situation that is likely to continue for months together, and we should really focus on that from the medium to long term point of view.
Yeah. So, moving to the first question, as we see that Trump has said something for the Indonesia and he will do the same for India as well. What are your calls on that?
No, I'm happy to hear it, at least because he made the mention that we'll be doing something on similar lines, and I almost thought so because uh, my feeling has been that the world is going to move uh, towards greater free trade. That is what this is all about. People have just not understood it. I mentioned it in my YouTube videos also in February that this entire tariff thing might be a movement towards reglobalization and not deglobalization. There's too much been written about weird things, dollars falling, deglobalization happening, as if nobody's going to trade with anybody. But that's not what is happening. What is happening here is getting greater trade, okay, and at terms that appear fair to everybody, which means that, see, US, because everybody's been a lot of people tend to export to them, especially emerging markets. If we just pay, if we just in fact we are also not paying. It's like them collecting tariffs on that. So if they collect some money on it and also get a deal to enter many emerging markets, because see, everybody has restrictions.
Hello. So, am I audible? There's been a problem with the internet. Oh, shit. No voice. Just a moment, guys. There has been an issue with the
Yeah, I think
yeah
it's a network issue on top. I don't know if it was you lost network or not. I
the
don't know.
internet, sir.
I
I also
definitely
did
lost.
lost the network, sir.
So I've
Yes,
gone on
yes.
to my.
My network was also lost.
Hmm. ठीक है.
Yeah.
We are back.
Now, now we are back. Sorry, guys. Now we are back. Yes, sir. Let's go on.
Yeah, for
Where we
anybody
were.
who thinks we will not be back, we'll always be back with more force.
Right.
So
True.
that's just been my journey. But coming back to the market's also coming back, despite being hit every time by something or the other. It's coming back from the April lows to the May lows to now the June lows, each time making a higher bottom. That is very important. And like I was trying to say earlier, the tariff scenario will play out positively for the whole world in a 6-month time frame. So don't expect it right
Mhm.
away. But if you just imagine the world in 6 months, it's going to be a better place, and that is what should drive your decision making.
So, speaking of the decisions and markets, let's move on to the second question, that is signals. I had this question in my mind from a way long back. People always demand signals. People always say कि भाई बताओ मुझे ये खरीदना चाहिए नहीं खरीदना चाहिए. And see, the maximum noise what comes in the market is because of such people कि खरीदना चाहिए या नहीं खरीदना चाहिए. सिग्नल्स बता दो मुझे, ये बताओ कि भाई क्या करना चाहिए इसके बाद. So why do people always rely on others advice rather than going and picking up the stocks themselves or studying? Why do people fear it? Matlab, I do have this question, like, do they fear this thing or they don't want to do this thing? What is there?
So yeah, so see, everybody is not as involved in the markets as us, and so what that
Hmm.
really results is in just a sec, yeah, that results is in them not having time. So that is one part of it which we cannot deny. People who are working full time don't necessarily have the time to do their own detailed research and analysis.
Hmm.
Uh, but even then, there's another aspect to it which happens later, that some people who do start doing their own analysis initially, they find that they are overwhelmed by their own emotions and their own behavioral traits. Okay, so that's why you have this entire subject of behavioral finance. So various reasons which relate to your personal behavior that come in the way of successful decision making. And at that point of time, people decide that, okay, why can't I have something which has no human intervention, and that's where your dependency shifts towards computers. So you have algos, high frequency trading, and now the advent of AI based recommendations and so on. All of this are part of removing the human element from it, which tends to get emotional and then takes wrong decisions. So the first step is, of course, going from doing it yourself to taking recommendations from someone else because you lack the time or knowledge to do it, or you're not willing to put in the effort. Because sometimes, say, for investing, what you need to do is spend an hour or two on the weekend. But again, what should you do in that hour or two? So it does require some learning and willingness to go through some learning about investing and finance. But if you're not willing to do that, even you end up depending on someone to give you that advice. But the last mile is that when all else fails, you don't find a good advisor, or you're not able to do it yourself, because even though you learned everything, you get hit by behavioral issues. That's when we shift towards computers as the last line of defense to remove the human element.
That's where things come. So you are stuck. Your video is stuck, sir.
No, maybe I was not moving.
Yeah. I thought that your video got stuck once again.
No, I was just still and talking.
Yeah. So that's where the people, like, that's where the things come, what people are always inclined towards.
Yeah.
Then, sir, I had one more question that is very, very personal. So, like on Friday, I asked, what is the thinking process behind strike? So, what is the thinking process behind India charts? Like, what did you like? How it started, and how did you got the idea of starting India charts?
So the motive behind doing something, a strike came much later. The motive was really to give people viewer training, something they could use and execute. But when it comes to India charts, it really started as a blog in 1999. The dot-com bubble got blogging as the first thing that got viral. And
Hmm.
I felt that, and I was working at a firm prior to the one I spent my most time with, which is Sher Khan. So I was prior to that with a proprietary house. And I thought, why not share my views, just writing it there and, sending it internally for the investment decisions. You sometimes wonder whether you get enough people to appreciate the work you're doing. I said, let me put it out publicly on a blog, since blogging was just starting to happen.
Hmm.
And I used to read another global blog known as Asia Charts. Okay, and I liked the name. So Asiacharts.com was a nice name. And therefore, I said, why not do India charts? Now, at the peak of the tech bubble, the thing is everybody was squatting on domain names. So therefore, domain names were not
Right.
available because people thought कि इसको 200 रुपए में ले लो या $20 में ले लो, 100 में बिकेगा, somebody will buy it from them. And so India charts as a domain was not available. And but many people were promoting writing on the web through free domain addresses. And so I just went to Yahoo, which had such a feature known as GeoCities, where you could just sign up and start writing your own blog. And so it was a GeoCities / India charts kind of a domain. And I continued to write on that till 2003. So the motivation was just to let people at large read what you're writing. I had no idea of how to market it. So apart from sending it to the few people who I was in touch with at work, I didn't really know how it would ever go viral. But I said, whatever be, let's just do this and then I realized that see, I was not doing this every day like we are doing today. It was like once a week. So it was Sunday
Hmm.
when the markets have closed. You have had the weekly closing, and you just look at it with a very unbiased, look at the charts, decide what the charts are telling you on a weekend when markets are not opening and staring at you, and write it down with a table and all on the trend and direction and some couple of paragraphs. So usually 1 or 2 paragraphs, and that's it. It was not even a CMS site. Today, most people see blogs where you have history. There was no history. There was no archive. So I used to write it, delete it, and rewrite it next week. So no. So my writings
Okay.
from 1999 to 2012 are actually not there anywhere. 2003, 2001, I joined Sharekhan. I started sharing my blog with them also, and then my CEO used to get wild at me. Arey, you wrote this last week, and now I can't see because you're overwriting. And when clients would come back and see what Rohit said, and you would say, I can't tell them that, see, this is what he said last week, and you're right. Like, he couldn't do that because there was no archive. But I was writing reports for Sharekhan itself, which used to circulate. So of course we had that. That was very different. So the reports you write there, which is a view or a call, to buy or sell something. This was like a weekend research on what the overall market trend is. So that's what I started out doing. And so it remained that way. So it was in 2003, post the .com, 3 years after the .com bubble, all the domain squatting went away, and the domain became available. Indiacharts.com for some 200 per month or some vague price like that, or per year. I think it was 500 a year or something very low.
Okay.
So
So
one
you got caught hold of
people,
it.
I just got hold of it and I said, "Chalo, no, I keep this." So that's what happened. I mean, much later than we monetized the site is, more than 10, 11 years later. Till then, it was just free writing. Just write every week, let people know or read, and enjoy the view.
It's a long way, sir. It has come a long way. Indeed.
Yeah.
So that's it for today, keeping the session very short. So thank you, sir. So let's move to the questions. So now, viewers, you can ask your questions in the comments, and we will choose 3 of your questions, and sir will answer them. So going for the first question, sir, it's from Dheeraj.
No, but I think it's a stock specific question. Breakout and
Okay.
M&M. So I will not answer the second part, but is it a flag and pole? So from an educational point of view, although what SEBI says is educational point of view, you should use 3-month-old charts.
Mhm.
I, because you're not supposed to give a future perspective. But
Right.
is it a flag and pole? So what is a flag and pole essentially for people to understand? Now, it has slightly gone below the flag, but a flag is basically a channel of sorts, something like this. Ideally, in a flag, it would not go below the line and then above the line. At least not so much. So it almost breaks the flag. So it doesn't look like a flag anymore. Typical flag is if prices, stay inside the range, and then go up. So this is a typical flag situation. If it breaks that, then there's a false breakdown up. And to what extent, how much below that should we take it as a false breakdown? So it's not a classic flag. Okay. But M&M is an interesting stock because it does tend to have trends. It moves in clear waves. So that's for that reason I like it. But yeah, it's not a classic flag is the only thing. The story of the flag though is that we call the preceding pattern the pole, which is what Dheeraj is talking about. So he's essentially saying if this is the pole and this is the flag, and if we are breaking out of this channel, should we be riding the pole? I cannot tell you what you should do. We cannot recommend anything, especially on stocks. But all I can tell you is, yeah, it didn't fit the perfect flag scenario. That's only. Yeah, I'm sorry, I didn't share my screen. Right, I'm just talking away.
No, sir.
Wait, let me share my screen. I didn't realize that I was talking without sharing. So just to share it. Uh, Sorry. So here's the chart again, one last time. This is the channel. Okay. And what I meant is that the perfect flag scenario is one in which prices stay inside this channel like this, and they break out of it, and this is the pole. You know, but because you broke below it and went above it, it's not the perfect flag from a textbook flag kind of pattern. Uh, so yeah, I'll just leave it there. We can't really say about anything about the future.
So moving to the next question is from Abani Parmanik.
FMCG sector, yeah. So the interesting thing about FMCG sector is, so again, let me go back to a chart. Okay, is that from a slightly longer term point of view, I actually don't like FMCG, but in the short term there is a trade setup. Okay, the trade setup is that we are actually breaking out of a downward channel. Now you can even argue that this is a flag. At least in this, it's a bigger channel, not the small one like we saw in M&M. But we've broken out of it. So we can apply the concept of a flagpole here. That essentially, if this is the pole, let's only take so much, and this is a flag, and you broke out, okay, of the flag. Then the theory says that okay, you will move as much as the pole up. Or should you take the pole from the bottom here, or should you take the pole breakout above the flag, outside like this? Classical textbooks probably put it outside. In Elliott wave analysis, we take it from the bottom when we are doing any projection. But essentially, there is a case here for FMCG to perform in the short term, maybe a move to 61,000 or so. But just longer term, what I say is it's not that it'll go down. Longer term, I think there'll be other sectors that will outperform FMCG because FMCG is a defensive sector. And therefore, as an investor, I don't own or don't intend to own any FMCG stocks. That is the main point. I'd rather own something which is growth and will give me higher returns. But yeah, if you're looking at sector performance near term or some kind of sector rotation, then FMCG has broken out and is giving a sign that there's a move going on.
So moving to the last question for today's session is from Anirvan.
Moving forward, what is the probability of Bank Nifty outperforming Nifty till July expiry? At least your views on metal sector too. July expiry is very, very short term, but I would still say banks will outperform Nifty. They're already doing so because they fell less. Nifty has not retraced 61% of the recent fall. Bank Nifty has already reached that level. So in a sense, it is holding out better, and that usually results in outperformance on the way up. Now the same is also true on a 1 year, 2 year basis. I think for the next 1 year, banking in general and probably the highest beta factor is NBFCs within banking will outperform. So definitely, banking is going to be a performing sector to be with. Yeah, that sort of sums it up.
Yeah. So thank you
There's an
everyone
RMI question.
for
There's an RMI question that I should probably address. Sanket.
Yeah.
I wanted to
Yes,
ask
sir.
that weekly RMI on Nifty is around 6.7 from here, where it has turned down, and there's negative divergence on 40-day AD ratio and percentage of stocks above 50 Nice. Nice, all the strike observations. So how do you read into these observations? No? So I'll tell you. So first thing on RMI. So see, on RMI, it's not a sell yet. Is it a negative divergence on RMI? No. RMI is just turned down here. It's close to touching the moving average, but it hasn't given a bearish crossover. So there is no bearish divergence in this. I think he's saying on AD there's a bearish. So it's turned down. Turning down is nothing wrong. The sell crossover is if it go below the black line. Then you think about, okay, it's a sell crossover, now what? But that has not happened. And if Nifty does manage to close the week positive, then you won't get a sell crossover on the RMI. So that is the first thing. Now, see, RMI, I'm using it on TradingView right now. That's only if you become a mentorship student, you get access on the TradingView. But you can get it on Strike for a much lower price. And under Nifty, you can see that. Now, the next indicator he's talking about is the 20 DMA, 40 DMA. Now, he may be seeing a divergence somewhere. See, in the 20, we actually become oversold and you have a higher bottom, if you notice it. So there's a difference between the 20 and 40 when you actually look at both. Okay, so this one is a slightly higher bottom, not a divergence. But the 20-day AD came down, didn't touch the red line, but it came down quite a bit. So correction has already happened there. But what tends to happen is the 40 holds out more. And so what happens is that sometimes you might end up thinking that this is a negative divergence in the 40-day AD. It's not wrong, okay? But there are two types of markets. There's a market when you're in a bull market. Now, sometimes the 40-day AD ratio will only come down to around here, somewhere around here and then go up again. So you see these past cycles. So I am taking you into a bullish zone is just to understand the nuances of divergences with indicators for those who are not aware. But I can easily look at this divergence and say, oh, this is going to be a top. Now, you did get a correction eventually, not a first sign of a divergence, much later. And it was a small correction in the bull market and then went on. Again, here, the 40-day AD goes up, then starts diverging. And eventually at some point you get a correction or a consolidation and continues higher. So in a bull market, these are very small. Okay. And partly then what you have seen here is a correction in the 40-day AD. Okay. It's almost pullback here, not completely. But are we done here? So, I'm wondering, is there a correction around the corner of this magnitude also? That's also a very small magnitude. But, or are we done here and we'll just continue higher again? So that is where, you can easily get carried into expecting a correction. But it may or may not happen. So you have to be a little careful of, how you read these ratios and when you read them negatively, positively. And to what extent can we get a downside when we see a divergence? In a bull market, it ends up being very small. And therefore, when you've already had this correction, is that enough? Is the question I have to ask myself. Or can it be deeper? I would expect it deeper if I was done with a larger 5-wave advance. By larger 5-wave advance, I mean 1, 2, 3, 4, 5. Something bigger had gone on. Then I would. At this point of time, it looks to me that we are extending and therefore I'm not giving it that much importance. The last one he's talking about is the 50 MA. Now, what is the observation he made in that? Okay, he said percentage of stocks over 50 SMA. Okay, so and that also you have to check in whether it's for Nifty stocks or for other stocks. Okay, so for example, if I do a diffusion and I say 50 MA, this is for Nifty 50 stocks. Okay, the same thing which we did in the AD ratio applies over here. That if initially there's a divergence here, that correction happened. Then there's another divergence here, that correction has happened. Now, should you keep expecting that it will have to this has to go all the way down? No, it has already come down to 40s. Why can't it go back up to the 80s? So for that, we have to therefore take a call at the index level based on the trade setup. Not just this. Otherwise, again, the same mistake will happen here. That down here, you end up sometimes rebounding like you did here from here to here. So the AD ratio, so even this ratio has a midpoint where it sometimes holds out and goes back up. And then there are other times where it goes all the way down. Now, when will it go all the way down? When this entire move has completed what we call a 5-wave structure. Now, if you see a more bullish phase like here, post-COVID, here you will find it's fallen every time to maybe this low, here, and then gone below it. So of course, we are not at even 31 this time. Okay, but each time the market can set its different zone from where it wants to go up and down. So here many times it held at in a different type of trending market, the 50 level held many times. Even here it held. So that's a call to take. That whether now here when it dipped to almost 50, is it sufficient? I am taking a call that it is, because of the daily chart setup that we see here, which I'm not going into greater detail. We do discuss it every day at Indiacharts, but I'm considering whether it can extend from 50 higher like it did here, and many times there are many occasions in the past. Long answer, long shot, and about to wind it up before Chavan makes his call.
Yes, sir. So let's wrap up today. The session was very good, sir. It was good indeed. So thank you everyone for joining in. Let's meet on another session, same time on Friday. See you all. Thank you, sir.
Thank you.